Gold prices try $1,900 yet again as miners go shopping. GBP whips on EU lawsuit and Brexit talks. Gold prices pushed up through $1,900 per ounce in London trade Thursday at the third time of trying this week as Western stock markets cut earlier gains, commodity prices fell, and a flurry of corporate activity continued among precious metal mining stocks. Thursday's rise in dollar gold prices came after the metal lost 3.6% across September, its steepest one-month drop since June 2018. That 4.2% drop in gold prices preceded the now two-year uptrend starting in July 2018, with the 3.4% plunge of November 2019 then completing a small correction from last summer's 18.0% surge, gold's steepest three-month gain of the last 9 years. With gold priced in the dollar today reaching $1,904, still 7.9% below start August's current all-time record high, silver failed to follow as industrial and energy commodities slipped, holding below $23.60 per ounce. Euro and most notably UK gold prices in pounds per ounce whipsawed meantime, touching then losing and then regaining one-week highs at €1,621 and £1,475 respectively as the European Union announced that it is taking the British government to court for breaking their EU withdrawal agreement, but UK insiders said a Brexit trade deal is now in sight ahead of end December, when the world's sixth largest national economy will finally exit the largest single economic bloc. Sure, it was a bit of madness, the FT's political correspondent quotes an unnamed number 10 insider, but it has totally changed the dynamics of the negotiations. They know we're serious about no deal now. World number 5 gold mining firm Kinross said overnight it's buying a controlling stake in Alaska's Peak Gold project for around $95 million United States dollars. Shandong Gold Mining, the second largest producer in number 1 gold mining nation China, said on Wednesday it is buying Hengxin Gold Holding Co. for shares worth $387 million United States dollars, gaining control of central Xinjiang region's Gold Mountain project. US and Canada listed royalty streaming firm Wheaton Precious Metals (TSX) WPM last week announced its intention to list its shares on the London Stock Exchange, a venue where, according to analyst Edison Research, gold and silver mining stocks have tended to outperform their peers, with 52% outperforming the gold price in 2020 against 39% globally. Meantime, in India, the number 2 private gold buying nation behind China, but where demand has collapsed this year, independent think tank the India Gold Policy Centre of IIM Ahmedabad, IGPCIIMA, today proposed a survey of 200,000 households covering 25 states to understand better the gold consumption and usage behaviour of Indian households. Gold is currently the third largest contributor to India's trade deficit, says CNBC TV 18. In addition, jewelry purchasers tend to take gold out of the money circulation loop. India is already running the largest epidemiological study anywhere on COVID by far, says Ramanan Laxminarayan of the Centre for Disease Dynamics, Economics and Policy, in New Delhi, speaking to the LA Times. While jewelry and retail product gold demand has sunk in India during 2020's COVID lockdowns and economic slump, so-called digital gold providers led by apps Google Pay and Paytm report 40 to 50% growth in use of their platforms. Digital payment apps more broadly are seeing a second growth spurt in India after November 2016's shock demonetization of larger banknotes, claims a new fintech report from consultancy Matrix Partners.